Hey friends, it's PK Patel from Midwest Corporate Credit, where funding your business is our business. Let me ask you this. Are there certain things that people do or say, certain mannerisms or actions that absolutely piss you off? For example, someone kicking the back of your seat on an airplane, or someone chewing with their mouth open at the dinner table. Whatever it is, we all have these pet peeves, and so do lenders. Anytime we go to apply for a loan, lenders have these pet peeves as well. Things that could get us a higher interest rate, bad terms, or get our loan request completely declined. Well, what I'm going to do is I'm going to share 4 of them with you today, and I'm going to help you smooth out your financial rough edges. The number 1 item on our list is a credit freeze. What's a credit freeze, you might ask? It's basically when you ask the credit bureaus on a voluntary basis to freeze your credit and not allow anyone access to it. This includes applications that you voluntarily submitted. When you submit an application and the lender goes to pull your credit, they're not going to be able to obtain it because you've placed a freeze on it. This would definitely irritate some lenders. So what do? What you do is you call the credit bureau and have the freeze removed before the application goes in. That way, there's no back and forth. And I completely understand that in today's age of identity theft and data breaches, you'd want to freeze on your credit report to protect yourself, and that's perfectly fine. Just be sure to remove it before you submit any loan applications. The second thing on our list is a fraud alert. A fraud alert is basically nothing more than a footer on your credit report that instructs this lender to do extra due diligence on this particular application to make sure that the person that submitted the application is really you and not a case of identity theft. Typically, a fraud alert is placed on a credit report when you dispute something, or you may have placed it on there on a voluntary basis to protect your own identity. In either case, what you want to do is you want to put your cell phone number on that fraud alert, because the lender is always instructed to dial the number that is on that footer. And if you have your cell phone number on there, they will call you and do kind of like a makeshift 2-factor authentication to make sure you really submitted this app yourself and it's not a case of identity theft. The other thing you might want to do is potentially remove the fraud alert on a temporary basis while that application goes in. The third thing that'll irritate a lender is you going out and opening up a whole bunch of personal accounts in a relatively short period of time. Now you might be wondering, why is this a big deal? Why do lenders care about that? Well, the reason they care is because now there's a greater competition on your income. Let's say, for example, you make $10,000 a month, and before you went out and opened, let's say, 6 new credit card accounts, your monthly bills were $8,000. Now, the lender that you apply with in the 7th position, he doesn't know if your monthly bills are going to exceed your income, which means you're going to be upside down pretty soon and you might default on all the debt. The solution to problem number 3 to put the lender at ease is to go slow and open up accounts slowly. Or if you're brand new and you want to build up history and you want to build up accounts really fast, know that you're going to be tapped out after you open up maybe 5 or 6 accounts all in a row. For 2 or 3 years, you're not going to be able to get any new accounts. If you're okay with that, then go ahead and shotgun all your applications out and open up a whole bunch of accounts. And if you're younger and you don't have a lot of history, this strategy might actually make sense. However, if you're going to need credit in the next 12 to 24 months, I wouldn't suggest shotgunning out applications. The 4th and final item on our list are inquiries. Lenders hate inquiries. Reason number 1 is because they don't like the competition. They know you're shopping around. Reason number 2, and this one is actually the bigger reason, is because they don't know how many of those inquiries are going to turn into actual accounts, which is going to cause the problem number 3 that we discussed, which means greater competition on your income. Let's say you have 6 inquiries and then you apply at lender number 7. He doesn't know how many of those 6 that you applied with previously are going to also extend credit to you, creating greater stress on your income with increased expenses. So how do you solve the inquiry problem? Well, one suggestion I would give you is to take it slow and maybe don't submit more than 4 applications at a time, and take the best offer out of those 4 that you get. An advanced solution that we implement for our clients is basically we already know where the lender is going to pull from, and we're able to stagger the inquiries. So because there's 3 credit bureaus and banks pull from one of those credit bureaus, we already have the information on where the bank is going to pull from, and we're able to submit 6 different applications and only have 2 inquiries on each bureau, which increases the likelihood of additional approvals. All right, guys, that's all I got for you today. Hopefully you're able to use these tips and keep your bankers smiling. I'll be back next week with another awesome video, so make sure you subscribe to this channel. For Midwest Corporate Credit, I'm PK Patel. Thank you for watching.